All right, so I wanted to share with you our most recent investment committee notes and thoughts, especially considering the levels of volatility over the past month or so. Now, it's not fun for anyone to have negative down years and lose money, even though it's temporary and it doesn't matter in light of the long-term goals. After 20 years of doing this, I much prefer the 3 out of 4 years on average where the market is up, clients are making money, and worries are low. However, our clients who have entrusted us through the market ups and downs, they've been rewarded, and we will continue to do everything in our control to help you meet your financial needs and dreams. And also, that being said, here are the things that we are seeing, hearing, and that we're doing on our clients' behalves. So as the famous film writer William Goldman concluded when he was asked whether one of his films would succeed, his reply was, "Nobody knows nothing." And I believe this holds true as I've seen it over my 20 years, especially recently, right? So the consensus before the Russian invasion of Ukraine was Putin won't actually pull the trigger. Well, obviously he did. Then it was, well, if he does, Ukraine's going to roll over within days. And they haven't. And then it was, all we heard was how the stock market would be obliterated if this happened, which it hasn't. Now, I rest my case. You see where this is going. So I want you to think about this. As the midterm elections near, volatility seems to be increasing, which is normal. Now remember, if one party controls the Senate, the House, and the presidency, this tends to lead to proactive fiscal policy. That is the printing and spending, in this case, of trillions of dollars and stimulus. Now, a balanced Congress, on the other hand, over history, is much better for the stock market. And we believe that the market is pricing in Republicans taking back the House, maybe the Senate, although that's shifting a little bit. This happened after the Dems had total control for 2 years with Obama. It also happened to Republicans after Trump's first 2 years in office. So we have made changes throughout this year to go slightly more defensive, and those have paid off for our clients by protecting some on the downside. Some of these noted changes made were removing emerging markets. We added alternatives and the reduction of traditional bonds as interest rates were rising very quickly. We also added energy at the beginning of the year. That helped. Then we also trimmed back the position some as prices rose. We went heavier on value stocks over growth. All of these changes have overall helped. Now, we are currently preparing another round of slight tweaks should the market break support levels on the downside, and we're watching that closely. Again, let me say this. We are not market timers, but we do have great research and resources at our fingertips to help make tweaks that we feel ultimately can benefit our clients. These changes will involve adding managers that have a track record of protecting more on the downside, but still are getting that substantial portion of the upside. And some of these we already did earlier this year. So in summary, we aren't making any major changes right now. We're simply reviewing our models, and we're preparing for some quick adjustments should this market find a new bear market low. Now, hopefully that's not needed. Remember that we are here for you so that you don't have to worry about this stuff. We want you to enjoy spending time with those you love, doing the things that you love. And as I always try to tell clients in meetings, remember, time is the real currency, not money. We're going to help you manage your money so that you can enjoy your time. Let us help. We're passionate about this stuff. I hope that's apparent when I do these videos.